Hey everybody, Boris, welcome to the crosses section for December 12th to December 16th of 2016. And when it comes to the crosses this week, there's a couple of very interesting narratives that I think are coming to play. Some of them on the sidelines, some of them primary, that I think all of them worthwhile for us to explore. The first idea is one that I just simply coming in for a very, very strong technical support basis, which is the Euro-Pound trade. The Euro-Pound has gotten, of course, decimated to the downside over the last 3 or 4 or 5 weeks, but it's coming into this very, very strong 83 support zone. Just on a pure technical basis, I'll show it to you on the charts. There's a triple bottom over there, and if you sort of assume that the euro has kind of washed out, this is obviously a dangerous assumption, but one that could really pan out to be a pretty profitable one. If you assume that the euro has washed out at this 105 level, any pullback up in the euro certainly is going to help the euro-pound cross to the upside on the bounce side. So I kind of like this as a small risk value proposition to the downside to try to take a nibble at the euro pound here on the assumption that the 83 will hold and you have a bounce back on the trade. The other idea that's interesting, of course, again on the assumption that the Fed surprises to the downside, is actually pound yen. Remember I talked about the idea that yen crosses will ratchet up in an elevator case or sort of escalator case when they go up, but they fall like elevators. They drop like a stone. And I think of all of the yen crosses, the one that's most vulnerable to just getting hammered to the downside should the Fed disappoint would be the pound yen trade, which could go down to to the downside for a couple of reasons. If cable rolls over because of Brexit woes, and if yen rolls over because Fed doesn't really want to tighten anymore beyond the December hike, both of those things could really come in for a very quick move to the downside. The last trade is the intra-commodity dollar trade, which is the CAD strength. I like the CAD strength here a lot, and I like it actually the most against the Kiwi CAD. I'll show it to you on the charts. We've had a very interesting reversal to the downside in the Kiwi CAD, and I think there's more downside to go. So let's just take a look at the levels first, and then we'll take a look at the chart ideas and how they shape up in my opinion. Euro-Pound, it's an 83.85 support to resistance kind of a trade, and I like buying the 83s on the assumption that they won't really break too hard below that. Pound yen is at this cusp of a resistance at 145. You can see it. Now, if it blows through, I think to 146 or higher, clearly the trade is wrong. But if it sort of hangs out at around this 145, doesn't really take out the 146s, a potential to move back down to 140 becomes very much in play. And the last trade here is this flip reversal in the Kiwi CAD that we saw last week to the downside that I think has more juice to go, at least down to the 93 level. So let's just take a look at the charts themselves and see how everything shapes up. First, let's start with the euro pound, and let me show you what I mean about this very, very long-term support. So we have all of this long-term support at the 83 level going all the way back to July, as you can see. And the fact that the euro pound kind of bounced down to the 83s, beginning of last week, came back up, continues to sort of hold the 83s. If we can hold the second, the 83s at the second level here for the second time, the chance for a bounce back stronger towards the 86s really looks very promising. I like this trade just on a bargain hunt basis, purely on a technical basis. The pound yen. Similar story towards the upside. So you have this lots of distribution here. The 145 basically you spend the whole week distributing at 145. Yes, it could peak above 146, at which point it does have the 150 in play, and that's where you would be wrong. But on the other hand, if it sort of continues to distribute, really doesn't really get up above the 146s, the chance for it to drop like a stone towards 140 on any kind of a disappointment from the Fed, very, very strong, and that makes it a very compelling risk-reward trade in the week to come. And then last but not least, here's the Kiwi CAD that really reversed quite nicely here. After a couple of big spikes up, it really reversed quite nicely down to the support. Now it is at this 94 support, granted, but now starting to break that 94 support, and the next level down really comes out to be 92.50. This is a much lower volatility trade, but it still could be good for another 100 points to the downside, with 95 being the 95.50 being the stop here on a reasonable basis. So a lot of interesting, very different stories on the crosses here shaping up this week. Some of them trading off the major flows, some of them trading off the minor flows, but all of them potentially very lucrative as we go into the trading week ahead. Wish you guys the best luck, the best of trading. Boris, over and out.